because this is our new protected low. Because this low sent us to this high. So now you're going to be looking for a retracement back into this zone, which we don't get. It is going to be unmitigated. So we're going to keep that on our chart because they will get retested eventually, whether it's today or tomorrow or whatever. But so continuing on, as we're looking for a retracement, we don't get it. We get this retracement and we come back up and we close back above this high right here. So that is going to make this our new zone. This last down move, because this low is responsible for making this high, and that is going to make this our new protected low. So we're going to be looking for 50% or so, somewhere in there, 30, 40, 50%. And then we get a wick below, but your stop is a close below this zone, because that's until we close below this low is still valid. So as you can see, like we would want to take our long from 50% or so. Stop would be a close below, and as you can see, we go right back up to the top. So you want to do that with all these zones. You want to be shooting just for the high of the zone, which is that old high. So continuing on, we come down, we retest this zone, like I said, and then we come up, we make a new high. We close back above this high. Now this is going to make this low is responsible for this high. So this is our new protected low. So our zone is going to become this last retracement back down. We're going to look for our retest, which we do get, but it's not very much of the zone. It's in there, but I wouldn't have entered the trade up there, I don't think. But so anyways, we get our somewhat of a retest, and we come up and we close right back above this high. But if you guys watch my videos, you'll know that I do like a 3 strikes and out. So anytime, like, this would be strike number 1. This high would be strike number 2. This high would be strike number 3. And then I'm going to be looking for some kind of like break a structure back down. I'm going to be looking for a low to fail, because I know I have an unmitigated zone back down here below. So I'm willing to sit out and miss moves before I'm willing to get caught chasing a trend that is this overextended. But I'll continue on with like how this one goes, because that now that we close back above this high, this is our new protected low. So we know we can long anywhere around as close as possible to this protected low, because that should be our saving grace. So as you can see, we come back down, we get into 50% or so. You long it. Stop is at the bottom, close below, and you get like straight back to the take profit for 9 points. So as you can see, we just continue on. We're just gone for the rest of the day on this one. So I'll just go ahead and go on to the next one. Any of you guys have any questions thus far that I can go over? You can put it in the chat, or if you want to get on stage and ask me. I'm glad to hear that, because sometimes this can be confusing trying to mark out your highs and lows. That is the hardest part, and the easiest part for me was going in to like charts like this, where you can see them working instead of like going in and back testing candle by candle.
It is.
Oh, all right.
I am.
So I found my best way, instead of like trying to back test like candle by candle, is go in and just look at this. Just, you get, and I have personally, I have to draw them out with this path tool, because it just makes it so much easier for me to see how every dip is getting retested. You can see a lot easier with the line.
So spicy, it has to close below the zone. It can wick below it, but it needs to close below. Why? Because once you get to close below, then it's your break of structure down, and you definitely don't want to be in that long anymore. You can wick below it, sweep liquidity, but if it doesn't close, that's not a break of structure, and the market structure is still bullish on that time frame.
Yeah, that's like sometimes you'll hear Mark saying, "Oh, well, we're bullish," but sometimes we may need to go take some lows to go higher,
Mm-hmm.
and that's exactly like what happened in this zone, this pullback right here. Yep. They went down, took those equal lows. Yeah, they took those equal lows right here, and then we shot straight back up. If you go into your trading view, I think it's under. Oh, where is it? It's under shapes. Yeah, it's under shapes, and it's right here. So it just makes it so you don't have to draw like 5,000 trend lines. You can just kind of just go like that. It just makes it easier. Yeah, I do 30 seconds sometimes during London, sometimes 1 minute. But all right, well, I'm glad we were able to answer
Yeah.
some of you guys' questions. I will continue on to the next day.
Yeah. I still struggle with labeling zones, so
You know,
it just takes a little bit. It just
it takes time.
just realizing what low sent you to that new high, and you had to have a close over. Remember, so this is just it's DTFX.
Yeah,
Yep.
this is mainly like Dave's model. Dave
I've been
teaches.
implementing it with ICT just because like a lot of times the 50% will be like a dealing range 50%, and then we're looking for like it just so happens to be at 50%. There's also in a 5 minute FEG or something like that, but for
But you can also take like inverses out of this as well. Like if you see a zone and we come back in and we retest it, like look at this 1 minute. This if we're in this zone and you know this, you know where your low is, you could take this 1 minute inverse back to the high of the zone or back to this high. You can use them for inverses as well. So that's how you can implement it as well. Yeah, I only really traded on the 1 minute. You can trade this on any time frame. Literally any time frame. You can draw it on hourly. You can draw it on the 4 hour, 15 minute, 5 minute. But to get in most of your entries, like during New York, 1 minute is usually what I stick with. All right. The exits will be like at the top or the bottom of the zone that we're longing or shorting. Not back to the high, but at the. I'll show you in a second here. I will go. I will put a trade. So as we're starting, like I said, starting at like 7 o'clock, we're coming down. We're marking out our highs and lows. We get a break up here, but this is still 9 o'clock. And then I'm still working on getting to New York. So right here is New York session. Not to have you lose track, but you can repeat what makes the high or low protected to vote. Yeah, I will. So this would be our low. So as you can see, as we're coming down and we have these retracements, this is like your zone that you're gonna want to short. But right here is open. It's right here. You're gonna want to come back. So we get a break of structure back to the upside right before open on this one. So that would make like this your zone that you're gonna want to long. But we obviously when we get this pullback, so Casey, what is happening here is that we're coming down and then we come up. That is going to be a retracement. Once we close back below this low, like right here, like we get a close below finally right here, this high is going to be your protected high. Anytime a high creates us to close below a previous low.
All right. I have a question.
Yep. Yeah.
So like a lot of times I'll draw my zone. So how you drew it from that that high right there?
We're right here.
No, where
We're
you have
right here.
yeah. I've been drawing it like from the last red can, like so like from like the 30% zone over like 3 candles. Go over like 3 candles.
Right
Like
here.
yeah, like I would be considering that like the high. Why is it that high and not the other high? Or just,
because that's part of the down move that sent us. That's just part of the down move that sent us,
okay.
I guess. That's just yeah, I don't know. That's just how I think I used to be like that too.
I think
It's just back testing and stuff. But you can see we get a so as we close above this protected high right here, we're gonna close above. We're gonna draw out this last down move as our zone that we're gonna be looking the long. So as you can see, we do not get our retest right here on so this would be our zone. We do not get back into this zone. Instead, this retracement sends us to a new high. So we're gonna have to make a new box, and that is gonna be our zone along. That zone does fail, but this one, you still know that you can, even when you have unmitigated zones, whether it's like way up here, you'll see I took one today. They'll usually give us a reaction at some point or another when they come back into them. So we ended up breaking structure down right here. Because this is our last low right here. This is our last low that sent us to this high. So this was our protected low. So we right here we broke structure down, which then would make this zone, this last up move would be our zone that we are gonna want to short. So that's where you would want to look for, say, your 50%. Stop is your top, a close above, and then you're gonna target just to the bottom of the zone, not these lows, because there's a lot of times you'll see like we may go hit the bottom of the zone and then continue on, and then you would get left in the dust because you didn't take profit at the zone. But this is what I'm saying about like, see how like when we had this dip and we went up and we did not come back and retest this zone, we eventually did. So we broke structure down, went up, we got our short, and then it brought us back into this zone, and we got our 50% right back up to the top. As you can see, so it can get kind of confusing. If that's a little bit more confusing, but I'll delete that just for sake of, so you guys know that once we broke this down move, this is our protected low because this sent us to a new high. We broke structure down, which created the last upswing is going to be our zone. So once we close back below, we got our 50%. We target back just to where this low was, and that is going to be our take profit. So then once we closed back below this low, this high is going to be responsible for, or no, this high is going to be responsible for sending us to this low right here, or this low right here. Once we close below, I guess, right here. So we are going to be looking to get a short back out of this zone, but you can see it is unmitigated. So let me catch up on this. So we're coming down. We're retesting this zone. We close back below, but we do not retest this zone up here. So we are going to keep that on our chart so we can we will maybe even like, even if we're in an uptrend, you can still take a short out of here and it'll still pay, then we'll continue on. So since we do not get a retest of this zone, we get a pullback here and we close back below this low. That is going to make this last up move our new zone. So as you can see, we get our short right around 50%. Stop is a close above, and we're just going to where this low was. So it's like a 5-point play, but I mean, it was like an immediate, almost same candle you got paid out. So continuing on, we go down, we close below this low, because this is the low that sent us back up here, and then we close back below. So this is going to be our new protected high, and this is going to be our zone. This last upswing will be our zone. And so then you can continue our path. We come down, we retested this zone, we're going to come back down, and you're going to see it. We have a retracement here, and then we go lower. So when we we come down, we make this low, and retrace back up, and we close back below this low, you're going to see this is going to become the new zone that we're going to want to take a short out of. So we come down, we make our low, we're retracing, and you would take your short right around 50%. And as you can see, this candle right here, the wick does catch the bottom of the zone. It eventually, yep. So like you would get in like right here, and then you would be out right at the bottom of the zone. Is that big enough, Troy? Can you guys see that?
Yeah.
All right. So ultimately, this is why I'm telling you guys, you want to take profit at the bottom of the zone, because see how we still got our take profit, but we continued on to break structure. So we broke structure. This was our high that sent us to this low. So this is going to be our protected high that should not be broken, which it does. So now that is going to make our last down move our zone that we're going to want to take a long out of. But as you can see, why I said that we have this unmitigated zone, this zone that was never retested, see what happens? We broke structure up. This zone is going to, you can take a short out of it, stop as a close above, not a wick, right back to the bottom, and that zone is what sent us back to this zone right here. So, does anybody have any questions thus far? Does it win rate decrease if you target the break of structure? Yeah. Are you talking about like when you have unmitigated zones? Yes, it is. I will say it is complicated. It just takes a lot of screen time, just like going into charts and just drawing your highs and lows.
Just
But
look
yeah,
at
I
it
mean,
as. Oh, go ahead.
No, go ahead.
I was gonna say, just look at it as if there's 3 downswings, just
Yep.
only look for a long.
Yep.
And if there's an unmitigated zone, treat it like you would equal highs. Like
Yep.
it's going to be a draw on liquidity.
See?
If there was 3 longs, only look for the next short. That's the
Right.
best way I can like say to uncomplicate it, so you're not getting so far advanced.
Yeah. Sub-Zero, I do not go down to the 5 second. I am not quite to that. I just kind of stick with my 40 to 50% entries, and I just go from there because that does good enough for me. But I am still learning to, because eventually, guys, you can you can get really in depth with these and like see how this is the last down move that before we broke structure to the upside. You can long here, like it can get really like in depth to really refine your entries. But for the most part, just 50% works well. But that is another level that you can go down to. But continue on. As you can see, we broke structure up. We got our 50% out of here, but then we come back and we retested this zone almost to our 30%. I usually like to see 30%. Exactly. Yep. That's like I was saying earlier, is that like anywhere you can see we're rejecting out of a zone, you can take an inverse out of it. So as you can see, we broke structure up, we come back, we retest this zone, and we go higher. I'm gonna get rid of this unmitigated zone. So we come up, we retest, we go higher, we close up here. So that is going to make this last downtrend is going to be our new zone. So anytime you close above an old high, that past downtrend is going to be your new zone. So this right here, as you can see, we come up, we close above, we get our 50%. We do not quite get to the high. I think we're like a point away, but as you can see, and it still gave you your reaction you're expecting. So then eventually, this is our low right here that sent us to this high. So this is our protected low that does get broken. So that is going to make this upswing is going to be our this upswing is going to be so. But I guess hold on. Let me go back on this. But see how I'm talking, guys. How you want to take profit or pretty close to this high or the top of the box, because see how you definitely still could have got out with profit. Yeah, you need to wait for zones to form and then be retested. So like, yep. So like, you're coming up and you make this dip down, and then you're waiting for us to close back above this high, and then you're waiting for the retest of the zone to go back for the high of the zone. So I mean, like I said, I do stress that, like, especially with the 50% rule, is just getting in close 50%, getting out close to the top. Just kind of, there's times like this that it happens. There's times there comes a point from hitting your 50%, and you're gonna miss a whole move just because of that. So, but as you can see, we break this low, we close below this low, and that is going to give us our zone right here. But we do not get it tested, at least for a while. And we're coming down. Click. So now we broke structure to the downside. We get a retracement. Come down, retrace. Come down, retrace. All right. I just wanted to catch up on my path so you guys kind of see it as well. So we come down. We have a retracement right here because we do not retest this zone. We don't retest this zone right here. And then we also have, so now we have two unmitigated zones above. So we are going to be looking, really looking for breaking structures to the upside. Yep. Government trader. That's what I was saying. Yep. You can see you can just see inverses out of these zones. I don't personally go even. I just, as soon as I can get really close to take profit, I'm usually out, or I just take the L. And then, but a lot of times you're still gonna hit your profit, but even though we're gonna continue structure back the other way or something. So as we get a retracement here, you can see we don't retest that zone really, and we come down. So now that's gonna be our third unmitigated zone. So this one's kind of confusing. So we're coming down, we get a little retracement again. So this would be your zone that you're going to want to short. And then, so this would be your zone that you're really currently looking to short, because this high is responsible for this low. And then we retrace, but we do not close back below this low. So this is still our zone, which we're going to get our 50%. And we'll go right back down to the bottom of the zone. Yes, Andrew, this is recorded. Leopard is recording this one. So see how I'm saying, like, you'll get your entry, and then we'll go back to the bottom of the zone, and then we go on to break structure, which we are expecting because we're over our three swing limit. So there's one, there's two, there's three. So we're expecting it. And plus, we know we have three unmitigated zones above that are going to be used, and they're usually going to give us a reaction, as you can see. Wait a minute. So this is our last high that sent us to a new low. So once we close above that high, you're gonna say we broke structure, and you're gonna be looking for like mainly like this zone up here. And you can see how these zones give a reaction. See how we reacted right out of that zone, but that was before we broke structure. So you wouldn't have been able to take this short, but still you can see how we hit the 50% and the same 1 minute candle, we went right back down to the lows. Same thing here. So as we break structure up, we broke structure up, that is going to make this last down move is going to be our new zone to take a long out of. So see how this works. As we come up, this unmitigated area, remember this zone right here was never retested until now. look what happens. So right here, you can take your short. Stop is the close above. Right back to the bottom of the zone, which is this low, because this zone is giving us a reaction to take us back to our current long zone. So you could take your 50%, and that would take us right back up here. And then you continue on. So here's our dip, and we close back above, and that would make this last down move. This last down move is going to be our zone we're going to be looking for a long out of. But as you can see, how right here, our unmitigated zone, even though our structure is bearish or bullish, we're still able to get our 50%. We do not get a close above. Or yeah, we do. That is a loss. So this would be your loss. This would be a loss. That'd be your close above. But then it brings us right back into this zone. You still get your reaction, but you get your close above. So that's how that day would end. But I really hope I didn't confuse you guys. I'm sure I confused some people. If you guys really want, you can DM me any kind of like questions you do have on zones or whatever. I'll be willing to answer them. We'll probably continue to do some more of these because I know they're difficult. Another thing too is you can go through and go to my channel and watch my daily reviews, and I have a good amount of
I was gonna say, do you want to go over yesterday's? Do you have those zones saved still on your chart?
I could see yesterday, Tuesday.
Wednesday.
Today was okay. It was kind of then that morning pump kind of made it. That was Monday. Or wait, I'm way back. Holy, I'm back at April 30. Oh, we'll get there, guys.
I mean, we don't have to. I was just curious.
No, I'm already here at May 9th. No, I'll go over it.
Yesterday was clean.
Yesterday was very, very clean. What was the date of yesterday?
I don't know. Look at your calendar and subtract
22nd.
1.
22nd.
Dude can draw zone per day, but they can't do -1.
So yesterday. All right, let me kind of just clear this stuff out. Leopard is older than I am.
Yeah, but by about 3 years.
So, yeah. So yesterday starting in, I started right around. Let's see, wait. So yeah, yesterday we're coming out of London. London ends at 5, so we're coming out of London in this downtrend. As you can see, all these protected highs are sending us to new lows. Every high is sending us to new lows. And
You're not sharing
eventually
your
we
screen.
get a.
You're not sharing your screen.
Oh shoot!
We're all looking at FX replay.
It's because I switched the trading view.
Oh. There you go.
All right, now you got it. All right. So as you see, we're coming out. London ended right here at 5 o'clock, and as you, like I said, you want to get to your charts and you want to see your downtrend is forming, and all these highs are your protected highs. Every high that sends you to a new low is your new protected high. So this high sends us to this low, and then eventually we break that high at 7 o'clock. So we're in an uptrend. So once we broke this high, that is going to make this zone right here our zone of interest. But as you can see, we do not test this, so we're going to keep this on our chart for later on. Yeah, I get you could say, yeah, you could pretty much say that. Government trader. Except looks like you don't always want to. Yeah, the trend is your friend is really what a lot of this is. But you don't always want to go for like the next high for your take profit. But so like this zone right here is unmitigated because we come up, we have a retracement, and we close back above this high. So that makes this our zone right here. So once we close above this high with this high, this becomes the protected low. So you would get in your long right here. Your long would be right there, and you would get your 12 points. So then now this is your new high. So off of this reaction, we go and we close above this high. That is going to make this last down move our new zone. So immediately after closing above this high, we get our 50% back to the high of the zone. Stop is below, and just like that. So now we close. So now we know this is our protected low still. We close above this high. So that is going to make now this retracement is going to be our new zone. So we close above. So like this is one you wouldn't really want to take because, like I said, 3 strikes and you're out. You don't want to really play more than 3. It's like 1, 2, 3 because at any given time you're looking. Usually 2 to 3 is what you want to be shooting for, and then you just kind of wait for a reversal. Sometimes you'll miss moves, and sometimes it'll save you. So we close above this high right here, and that is going to give us our new zone, which would be this downtrend. And once we get down there, we get our 50% retracement. We come up. Stop is up there. See how right here we wicked these lows? We took our equal lows and then still delivered like to the top of the zone up there. But we did not close above this high. So we ended up closing below this low, which gives us a break in market structure. So now we're bearish. We know we have an unmitigated zone below. We know the last up move, this last up move right here from these equal lows to this high. So this is our last up move from the equal lows to up here. So that would be your new zone because now you're bearish. Up moves are your zones. So as you can see, when we close below right here, we got our retracement back to 50% and shoot straight down. And as you can see, we went right down into our unmitigated zone, and look what happens right at the unmitigated zone. 50% back to the highs, which then sent us back lower, obviously, but so on and so on. But what happens, biggest thing for yesterday was this zone right here, because we broke structure here, we came back, retested this zone, but with this retest, this became our new zone, and now it's an unmitigated zone, and that is what I was shooting for yesterday in the PM session. I hopped on for a quick second and said, all right, we broke structure right here. This is our last high right here. This high took us to this low. And that's when I text Leopard and I'm like, I'm looking for this. So I was like, all right, this is going to be our new zone. Because once we broke this high, because this high is responsible for this low, we broke this high. I'm like, all right, I want 50% of this zone. And I wasn't greedy. I took my bounce and I ran, but I did ultimately tell him that there was probably a good chance that we were getting a draw up to this unmitigated zone. Which, like I say, even though it is unmitigated, and the market structure is bullish, look what happens. We got our 50% right back to the bottom. Even so, you can scalp that because all that did was. So we got a reaction out of the bullish zone, went up here. This gave us a bearish reaction enough to come back to our bullish zone here. And look at what NVIDIA earnings did. Because when we closed above this high, we got our retest right here. Then we ultimately closed above this high, tested this zone, came back, tested this zone, and went higher. So I hope that helped you guys. I'm not the best teacher, and it is a lot because it's just a lot of boxes and a lot of lines and a lot of highs and lows. But anybody have any kind of questions? Or you're free to get on and speak. Raise your hand if you want.
DJ. Yeah. All right.
Yep.
Yeah.
If you haven't, Andrew, go watch the videos in my channel. I do have some daily reviews of the past few days. So anytime.
Yeah. Just go over a quick example.
Yeah, I will. So trying to find a good, clean, easy one that's super clean. So as you can see here, I'll try to get some of this off my chart. So as you can see, we came down, we broke this low right here, guys. And then we retested this zone up here. And then we went lower. We closed below this low. That made this our zone. Shoot, hold up. I'm trying to find a good clean one here.
That's pretty good.
So, and then we come down and we retrace right here, guys. We don't retest this zone up here. So ignore that. And then we go lower. So as you can see, we're coming down and we make this low. Let me get to my shapes here. Circle. So you can see we make this low, or not that low. I want this low. As you can see, we make this low out of this zone, and we have a retracement, and then we close back below this low right here. That is going to make that last upswing our zone. So what we're going to be looking for is once we close below this low, we're looking to enter in this zone right here. You want to enter like as close to 50% as possible. Just pretend that went to 50%, and then you would shoot for the bottom of the zone.
Yep.
So then like carrying on, we come down, we make a lower low, and we retest that zone, and we come down, we make a lower low. So once we made this lower low, this last upswing right here is going to be your zone. So you're going to want to be looking at pretend to hit 50%. That's why I say I usually enter around 40% or somewhere in there, and I'm willing to average down. So anytime like we make a low, we retrace, and we make a lower low, that becomes your zone. It basically becomes an order block. So then you would short the retest of that zone just to back to the bottom of the zone. So is that you kind of understand a little bit more there, DJ? Oh, you said it, got it. All right, sweet. Yes, sir. If you have any more questions, just go ahead. You can DM me or anything you want as well.
All right. Any other questions? All right. Well, thank you guys.
I think that is
Moss
it.
is talking.
Yeah.
Or he's gonna, or he's saying thank you. One of the two. I don't know if he's. Thanks. Okay.
Yeah, for sure.
All right.
Win rate's pretty good on it. You just gotta really pay attention to your swings. You really want to pay attention to your swings. Like, see how we made a higher high? There's one higher high. There's two. There's three. There's four. See, I don't like taking any plays after three because look at four. Four did get really close to hitting, but it did not quite. So then we went 1, 2, 3. I would not have taken. Once we made this low, we retested this zone and we made another low. That made this our new zone. It ended up playing out, but I just wouldn't have taken it because 3 seems to be my sweet number. Honestly, I usually only take like 1, 2 trades a day, so I usually if I can catch 1, maybe 2, then I'm cool. I don't want to sit there all day trying to draw them out and all that. So That way, sometimes if it gets choppy, you can get caught up too. Oh, we broke the high, and then we broke the low, we broke the high. So you just never know. So if you can get in, get out, be done. That's what I try to do. Especially because your morning session usually a little bit more volatile than PM. So, alrighty, with
Cool.
that, I'm gonna hop on out of here. So that's a good hour session.
Yeah. All right. Later,
So,
guys. Thanks.
Alrighty. See ya.